Good morning, everybody. On this, well, it was a foggy morning, but now it's turning into a sunny morning down here in Melbourne. And welcome to 18 Minutes with 180 Markets. You know, we always talk about in the market, you need to be in the right sector. And what's really exciting is not only finding the right sector, but also finding a company that is undergoing a turnaround within that sector. So you can really get, a double whammy, if you will. And one of the hottest sectors, certainly, is the green movement, and specifically plastics. I think that we're all aware of single-use plastics going down the drain and biodegradables going up. What you need to do is to go into your local Coles and Woolworths, where 2/3 of Australians go every single week, and you can see no more single-use plastics pretty much. And the company that I think is really interesting to take advantage of this trend and is turning itself around as well, with some interesting margin expansion that I'm sure the Richard Tagoni will talk about, is Secos Group. And we're very fortunate to have with us today the Managing Director, Richard Tagoni, on the show. Richard, welcome to 18 Minutes with 180 Markets.
Thanks, Greg. It's glad to be here.
Excellent, excellent. Well, before we get into the company, we always want to start out with your story, because nobody, when they're in year 8 in school, grows up thinking, I want to be into biodegradables and be a plastics company CEO. So how did you get to where you are today? What is your story?
No, look, I certainly didn't expect to be in bioplastics when I was a kid, that's for sure. But I found myself in my career working in turnaround businesses and startups. Most of my career has been involved in businesses like that across a number of industries. I started most of my corporate training was with Optus Singtel. Back in the 90s, that was a startup at the time. I worked in a number of senior executive positions there before I went on to open up my own finance business as a co-founder. And that company still exists. I'm still a shareholder of that company, and it's done or assisted over $3 billion in loans since it began in early 2000. I've moved on to work as a business consultant, assisting startups and companies that require turnaround assistance. I've worked in the publishing industry, theatre. I've worked in the construction industry, real estate, and finance and accounting businesses throughout the last sort of 30 years, until I stumbled across Secos, which is a little biotech at the time, back in 2012. It fascinated me. The technology just seemed like such an obvious choice and offered so much for businesses as well as the environment. So I got involved. It was only a very small business at the time called Bioplastics. It was a small listed company, had very low sales, and I joined the board as a non-executive director at the time and made a small investment myself. Quickly realised that the company wasn't going to be able to commercialise the technology. That was probably the biggest challenge, even though it was great technology. The traditional plastic companies in the world were, incumbents, had a good foothold on how plastic and packaging was made. And bioplastics was really difficult to get into the market. So I ended up taking the role of chairman of the company, put on a new board, and decided that the only way to commercialise this technology was to find a traditional plastics business that had been doing it for years and doing it successfully, and get them to use the technology and actually bring it into the market. So we merged in about 4 years ago with a company called Stellar Films. They're an Australian company, an ex-Orica business. The 4 owners of that company had about 30 years each experience in the plastic hygiene space, manufacturing film for hygiene products such as diapers and feminine hygiene products like pads. These guys were experts in manufacturing plastics, and they were also looking for a new technology to allow them to expand in a market that was obviously very commoditized for them. So we merged the business back in about 4 years ago, and went through a fairly extensive turnaround and restructuring program, which involved selling off a number of our business units, closing some down, cutting out a lot of cost, because the company or the group, when it was merged, was burning a lot of cash, to get us to the point where we could be where we are now. We have very little debt. We have $2.5 million cash in the bank. We have a good balance sheet, and we've in 18 months ago, more importantly, we appointed a new CEO, Ian Stacey, who has global polymer experience, So to bring that polymer experience into the business in the resin side, as opposed to the film side, completed the skill set we needed to bring the company into the position it is now and set itself up to succeed in what is really turning out to be a fast expanding market.
Yeah, no, absolutely. And speaking of the market, can you describe, and maybe, for a wider audience, not too technical, if you will, the movement, into the biodegradables, into the bioplastics, how does that shift work from maybe where we were 10 years ago, the traditional plastics, if you will?
Okay, well, one of the big inflection points I think we all would have noticed in the last couple of years, China banned the import of recyclables, and I think that uncovered really what was going on with recycling of plastics, which was it was being effectively exported out of the country rather than being recycled locally. In fact, less than 10% of plastic in the world is being recycled, and as a result of that, it's not actually ending up in new plastic, it's actually ending up in landfill, which is causing huge damage to the environment. A lot of it's ending up in the environment generally, like in oceans. So, that was probably the biggest inflection point, because all of a sudden brands who had their names labelled on this packaging found out that their products were floating around in the oceans. And of course, these big brands with billions of dollars don't want to see their name floating around the ocean for obvious reasons. So, a small company like us at the time started getting calls from global brands saying, can we help them with how to make their packaging more environmentally friendly? And that really was the inflection point for us. So, which was timely, because we needed that time to get our backyard in order, our ducks lined up. And we're very fortunate because the company's in good shape, so we can capitalise on that. We have good. Go ahead.
Yeah, because you have a number of patents. Is that correct? Global patents, that is.
That's right. The original business, Cardia, was more of an R&D business. It developed the technology. There's 11 patent family, all head patents in most of the key countries overseas. So that's given us obviously where the technology lies. But there's a lot more to the patents. There's what we're seeing is it's the know-how, it's the ability to work with other packaging companies to make sure that the know-how allows our technology to work on their machines, so they can produce their packaging products using our resins, and that we can get we're constantly developing new resin grades. In fact, the last year and a half under our current CEO, we developed 2 new resin grades, one being a home composting grade and one being a stiffer grade that works very well in warmer markets.
Right. So, and I think that the key message for our audience is that plastic is not just plastic. There are lots and lots of permutations. Is that a good way to say it?
That's right. Look, it's a massive market, and we like to look at the market as there's 2 broad strokes to the market. One being what we call rigid plastics, which deals with your bottles and those type of hard plastics, and flexible plastics, which is really more the area we're focusing in at the moment, which is film. Film that you use film to make so many different products, whether it's wrap, vegetable wraps, bags, backliners and nappies, in hygiene films, gowns, medical gowns. So we deal in the soft side, and the soft plastic side is particularly it's more difficult to recycle. So even though the market needs to implement more recycling of plastics, but rather than putting them into landfill, it's those little wrapping plastic bits that are very hard to separate and recycle that we focus on, because we can turn those into compostable plastics or polymers. And the benefit of that is that, particularly with the food contact, when you wrap up a zucchini or a cucumber, or you've got a grape bag, or anything that's associated with food, works very, very well with compostables, because basically a compostable polymer is like food. It can be composted like food. It can go in the same waste stream. So the separation process is a lot. It assists the diversion of food out of landfill and into composting.
Right. And then, and I guess, just moving that on to the business side of things, if you will, can you describe, the financial impact of switching to you've switched up your product mix quite a bit over the last 24 months. I'd love to know how that affects. Well, I can see your margins have expanded, greatly in the last 6 months. But I'd love to hear in your words how do the financials work behind everything?
Yeah, absolutely. That's true. In fact, I think when we first merged the business, the bioplastic side of the business was barely 10% of our product mix. It's now
Right.
approaching 10%. So nearly half our business is in the bio space. And we see that certainly growing. It's the bio space is the fastest growing segment we have. And look, we have a lot of spare capacity in that space as well. And like in any manufacturing business, the more you utilise your fixed assets, the better the margin is because you have fixed costs. So as
Right.
we start to grow, you'll probably find that we expect particularly the bioplastic side of the business to grow over the next 12 months. We should still see firming margins because we get better utilisation rates of our assets.
Right. And can you quantify maybe how the biospace margins are compared to your older margins on a product basis?
Yeah,
Is
look,
it not so simple?
it's not so simple. There's a number of applications. Obviously, the traditional plastic market is extremely commoditised. What we do is, bioplastics are more expensive than traditional plastics. There is a price differential, but
Sure.
what we look at is the benefit to the customer. A lot of for instance, the local councils in Australia are moving to using compostable plastics to assist households separate their food waste so it can be put into their green bin and taken to composting. And what that does is by moving food waste in the household and composting it instead of putting it into landfill is saving councils millions of dollars. And I know Penrith Council recently announced that over a study they did over the last 10 years of using diverting food waste out of landfill has saved them $10 million over 10 years. And obviously the compostable plastics assist households doing that. So you can put your food scraps in a compostable bag and throw it in your grass bin outside, and it gets taken away and composted instead of thrown into landfill, which is becoming a very, very expensive process. The cost of landfill. When I was a kid, it used to be practically free. You'd go with your truck and you'd dump your rubbish, and dumping rubbish was almost free. Now it's a very expensive thing to do, and that trend's happening all over the world. We're seeing, the cost of land and the cost of dumping rubbish into landfills becoming very expensive. So that's adding to the cost of packaging effectively.
Right. And so, what you're saying in your words, there's a great cost benefit analysis for these councils by switching products, even if it seems more expensive at first. As far as the sales cycle of getting a council to move to the other side, is that an arduous process from your point of view?
Look, I think the councils, when they want to change the way households separate their waste or bins they use, there's obviously a process they need to go through to allow households to understand and be educated in what's going on. They need to see the benefit of it. So yes, there is a process. And then there's usually a tender process. We bid for the bags. There's usually a new little bin that goes on the kitchen caddy bin that goes in your house. So there is a process, and councils need to prepare for that. So they're rolling out slowly throughout Australia, and similar things happening in different jurisdictions around the world. But I'm not sure what we'd do if they all switched on at the same time anyway. I'm not sure we'd be able to keep up with them. But it's been we're seeing huge growth. We've got about $2 million worth of tenders out there at the moment, just that are in play. And we're seeing more and more councils coming on board because they're seeing the huge financial benefit and environmental benefit going in what they call a FOGO program, which is a food and organic waste diversion program.
Right. So said another way, your target market, is enormous.
It is enormous because it's councils are they're the early adopters. They local governments are the ones that saw the benefit very early. But we're now seeing retailers into this space. We're seeing food distribution companies. We're seeing big brands saying, okay, well, we don't want our brand floating around in the ocean in a bit of plastic for the next 1,000 years. So we're seeing multiple areas see the benefit of compostables in particular. And therefore, we're looking at developing a wide range of product applications. It's not simply just bags. It's medical gowns. We're talking about nappies, other pads, other hygiene products. In agriculture, They're looking at agricultural sheets to go on farming that can be compostable and effectively ploughed back into the dirt and compost. So many applications. It's a huge area.
Right. So I guess then, leading on that again, back to how does it hit your numbers? It sounds like your revenue growth over the next, let's call it 24 months, could be tremendous. And at the same time, you're getting your product mix into those higher margin products. I believe in the last year, you've taken your margins from 8% up to 14%. It's nearly, it's a 50% increase. Do you still feel like that trajectory is on course?
Yeah, look, the sales trajectory we would expect to improve because we've, as the mix of bioplastics takes over the mix of traditional plastics, we'll probably, because that's growing at a faster rate, the overall top line growth will probably accelerate. We expect that to accelerate over the next 12 months. And the margins should improve, maybe not at the same trajectory, because as that goes, it won't continue to vertically. Wish it would, but it won't, obviously. But we're getting more efficiencies in our manufacturing process. We're bringing the price down for our customers at the same time, so we can access more markets. So it's getting that balance right between the margin and, of course, growing the top line, the margin at the same time, and maintaining our cost base to do quite well.
Yeah, no. I mean, it really sounds terrific from that point of view. And then on the balance sheet, you've really undergone a major transformation on the EBITDA side on our P&L statement, but on your balance sheet too, your cash, is around $2.5 million of cash at this point. And
that's right.
Can you talk about your the R&D and the burn rate? How do you feel about your, I guess, to the degree you want to discuss your cash position and the balance sheet?
Absolutely. So our burn rate's dropped down. We're certainly approaching profitability and cash flow positive position. We're still investing in our R&D, mainly not long-term R&D, but more the short-term R&D type projects, which are more application-based. As we get new customers that come to us and say, can you make this in a compostable or environmentally friendly packaging? Often there's a bit of R&D that we have to do jointly. That can be something that can take 6 months. It can take a month. It can be something that shared cost. But we expect to continue spending money on that application development. We have spent a lot more in the last sort of 6 to 12 months because of this growth in opportunities. But despite that, we're still seeing our cash burn drop down, and we're effectively very close to break even at the moment. Yeah, no, I saw it there. That's terrific. And as far as
I guess over the next 6 months to 12 months or something, as far as news flow, what would you want the market to be on the lookout for from your business point of view?
Well, look, as we launch our new applications and a lot of the projects that we have on the go at the moment, a lot of them are confidential, so I can't really say a lot about them. But we certainly have a lot of exciting opportunities that we hope to bring to market over the next 12 months. So we hope to be able to announce those at the appropriate time, and we hope our shareholders and investors can look out for those when we're in a position to communicate them.
Absolutely. Well, Richard, thank you so much for your time. And as you run a global business, you're very familiar with Zoom, as we've discussed earlier, the tyranny of distance. So this is nothing new to you, so to speak. But for the rest of us, hopefully we are out of our houses, relatively soon. But thank you very much. I really appreciate you, spending the time with us. As again, in conclusion, your space, your sector is an absolute mega trend. Your company, really feels like it's getting on the right track on an individual basis. It's a really compelling story. And with that, Richard, thank you very much for your time.
Thanks, Greg. It's great speaking to you.
Bye-bye.